Good morning. This is the Elliott Wave weekly update for the Dow Jones 30, being recorded on Sunday, May the 11th at 9:45 a.m. Pacific Daylight Time. I am here again on the cash market for the Dow, and I'm on my monthly maximum amount of data chart. And again, this particular chart has data back to 1902. So basically I have 123 years of data. And so I can show the very big picture. And that continues to be as follows. The grand supercycle, which is something that this is where I started, and it was provided by R.N. Elliott himself. So that's how I started this long-term count, by using what he had established back in the 30s and 40s before he passed away. So supercycle wave one, a grand supercycle wave one, topped in 1929. Grand supercycle wave two bottomed in 1932. So from there, we have grand supercycle wave one and two, supercycle one and two, cycle one and two, and then we are still within cycle wave three, which will consist of 5 waves of primary degree, of which 1, 2, 3, and 4 are complete. Wave 4 bottoming in 2009 after the great financial collapse. And then from that point, we have been tracing and tracking a primary fifth wave up that will complete primary wave 5 and cycle wave 3. So again, as I've demonstrated several times, the market it's all stepping stones, or stair stepping its way higher, and all we're fulfilling is all of the wave counts that follow in between. So if we're looking for a grand supercycle 5-wave advance, which is basically what we are sitting within, it is centuries old. So in other words, this particular move that topped in 1929 is being close to 100 years. So, and we're just getting ready to finish, possibly not even, we're just getting ready to finish cycle. So within grand supercycle wave 3, we have 5 waves of supercycle degree. Within supercycle move higher, we have 5 waves of cycle degree. Now, and we're just getting ready to finish cycle wave 3. So again, we have a 3, 4, 5 that's going to put in the supercycle wave 3. Then we have a supercycle wave 3, 4, and 5, and that's going to put in the grand supercycle wave 3. But let's just take a look. Cycle wave 3 began in 1949. So here we are in 2025, and we're just getting maybe to the top of cycle wave 3. Now we have 5 waves of primary degree, of which we're in primary wave 5. And we've been involved in this particular wave, which will consist of 5 waves of intermediate degree, of which we have 1, 2, 3, and 4. So where are we in this whole scheme of the larger picture? We are in an intermediate wave 5 that, when complete, will finish intermediate 5, primary 5, and cycle 3. So that sets us up for a cycle 4 fourth wave correction. Now, we're going to get back to what I continue to adhere to, which is why in my other markets, I switched back to a previous count, which showed that primary 3 and 4 were in place. And I had shifted some things around, and I really continued to have a problem with it. And I now have switched back in the S&P and in the NASDAQ. Well, in the NASDAQ, not because it's a different time frame, but in the S&P now is in the same level and wave count as it's happening in the Dow. And that's simply because of the amount of data that we have that we can track it that far. So all between the equity markets, they're all in a finishing stage of various degrees. So the NASDAQ, because it has not been in operation as long as the Dow, as long in terms of data, as long as the Dow, as long as the S&P 500. So in the NASDAQ 100, yes, in my opinion, it is now getting ready to finish a primary third wave. So, but in the S&P, it's finishing a primary fifth wave. So with that in mind, I'm going to bring this down, bring it out of here. I'm going to bring it down quickly to the 3-year. I need to do it bigger than that. Let's do the 5-year. There we go. So what we're looking for is we had intermediate waves 1, 2, 3, and 4, and that intermediate wave 4 completed in October of actually September, October. I'm going to move that over because it was October. October of 2022, we completed intermediate wave 4, which puts us in intermediate wave 5, which will consist of 5 waves of minor degree, of which we have minor 1, 2, 3, and 4 as complete. And so that puts us in minor wave 5 up to complete minor 5, intermediate 5, and primary 5, and cycle 3. So I believe we are getting very close to a completion or a major high in terms of what comes next. And again, just moving back out to that monthly, when we're looking at Elliott and we're having a cycle 3, so we'll be in a cycle 4, Elliott tells us, and I continue to tell you, that a fourth wave in progress will find its terminus, its endpoint, within the fourth wave of 1 lesser degree. Well, for in cycle, 1 lesser degree is primary. And again, that pulls us back to the 2009 lows. So I know I had spoken before about if I had left that as an intermediate. So in other words, this is intermediate 3, intermediate 4, as I was showing in the S&P for a little bit. That would suggest that we're just finishing an intermediate wave 5. And above it, I had placed that primary wave 3 up at this level. Or I put it up at a level in February, I think, or whatever it was. And that was just, it was actually incorrect. I'm going to tell you straight out, it was incorrect. So I've corrected all that, putting it back in a primary fifth wave going up so that everybody's back in sync in terms of between the Dow and the S&P 500. Okay, so let's take it down so that we can now get a look at where we are in all of this. So minor 1, 2, 3, and 4, we're in a minor fifth wave going up. That minor fifth wave will consist of 5 waves of minute degree. So let's now bring it down to the daily. Now we can see where we are. There's the 3, ABC down, that's the 4. Now granted, in the other markets, I had placed that high here, and it was ABC down for the 4. I'm leaving it as is here. It still comes up with the same picture. So that the fifth wave did end in a failure. It failed to take out the low of the third wave within the C wave coming down. So I have wave 5, C, and my minor wave 4. And we're putting the completion point at 37,103, which was the low that we hit on the 8th of April. This is, of course, lower, but the fifth wave failed to take it out, and it counts better that way. So I'm going to leave it there. It's not going to make that much difference, but that is, in case saying, well, that's not the low. It failed. The fifth wave failed to create a new low. So moving up, minute 1, minute 2, we're inside of the minute third wave. And then within that, we again are going to have 5 waves of minuet degree, of which we have minuet 1, 2, and 3 are done. I'm going to bring this down to the hourly chart. Now we can look inside to see what this all looks like. It was not an easy count. And it had a lot of curveballs that it was throwing and giving a lot of possibilities of what was going on inside. The third wave actually is the one that was problematic because we gapped, came down, we ran, we gapped lower, taking out that high. And so it just presented a lot of problems, but it does count 1, 2, and then 1, 2, 3, 4, 5 for 3. So again, this is just, it was odd. And there it is staring us in the face. But it had everything to do with the ongoing trade wars and the rhetoric and the possibilities, et cetera, of what was going on in between. Now, having said that, so we're inside of a minuet fourth wave correction. And this looks pretty much 1, 2, 3, 4, 5. So I think we should probably have, I can put in some very quick fibs this way, and we're just putting in retracement levels for, well, got to do that a little bit. Let me pull that down so I can open it up and we can get a look at what's inside. There you go. So let me just kind of change it around a little bit. And because if that's that, this is internal. So we've got to set it down to the sub and just put that in the subs and take all of this out because we're looking for the rally back up. And so far, we barely have done 382. And so I think if we're just doing a B wave back up, we need to look at these following levels. So we might rally to begin the week, but it's questionable because I can do a very small ABC, and maybe it was enough because we didn't get quite as high because 382 would be a minimal for me for a B wave, and that's 41,376, and this high was 41,353. So came close. And if that's the case, then I'm going to have to take that one out and we put in the following, and that's down to here, to there, to there. And now we're looking at the opposite side. And again, let me just set these up. And we're going to go there, put these in so everything will blend and not stick out. Easier to read. So we're looking here at minimal 618, then we have 1 and then 1.618 for the C wave, A, B, C for this minuet wave 4. Okay, so there's our markers. So 236, if we come down on this level, on the minuet level, it's 41,080. For the C wave, we have 618, which could work out at 40,965. So that's one little zone which could complete the minuet wave 4. Then we have the 100%, which is going to line up with the 382, which is most common for a fourth wave. And that comes in 40,721 to 40,637. And then we have the outlier coming on down here at the bottom if it really just kind of does a flop. And that brings us down to 1.618, where wave C would be 1.618 times the length of wave A. Most common is equality. So this seems to be, and lines up with the 382, a good little zone for this smaller wave 4 to finish. And then we get going on a fifth wave up. Now, again, putting this back in perspective, we may have a little bit of a rally left. Those are the markers. So we have 41,366, 41,453, and 41,527. That's 618, 50, and 382. Going to the upside to finish this internal small B wave. And then this, if it's done, then the C wave coming down, our support. First, we have 236. That's very shallow in terms of the minuet wave 4, but it's there, 41,080. Then we have 40,965 for the C wave, 40,721 for the C wave. So that's the first cluster of support. Second cluster of support, bottom line support if we get a stronger pullback. And so, and then we actually have a little bit more because we have the hourly 200 at 40,407. And then we have that fib support at 40,325. So that's first zone, second zone, third zone. And a break below that changes the picture altogether. So again, we're looking for the 4 and then a fifth wave up. I'm going to pull this back out to the daily because here we're still looking for the completion point for the minute third wave. The 100% marker got taken out, and I'll just show you again where that was so we can see it. It got taken out by a little bit, not that this is really moving, but it did enough where I'm going to take it off and still believe that we're going to have one more push higher, but it may not go that much further above the daily 200, which is at 41,776 before we complete this minute third wave. I think that we might get further because right now 41,461 was the 100%, where wave 3 would be equal to wave 1. And as you guys know, if you follow me for a while, I didn't mean to do that. I just meant to take out 1. Let me put that back up. And actually, I could just, yeah. All right, let me just edit. Boy, oh boy, oh boy. All right, so that didn't work. So I always, that I'm looking for within the third wave that it's going to come in greater than 100 because I don't want to put the pressure on that fifth wave or the third wave and any possibility it would end up being the shortest. So at 100%, it wouldn't be, but they'd be tied. So I'm always looking for that third wave, in this case, the minute third, to get a little bit more than 100%. So right now I am going to take that out, put in the 618 and leave it there. And that is sitting up here at 43,745. Now, I'm not saying that that's where it has to go, but that's an indicator via the fibs. 100% was down here, a little bit below, and like 41,493, I think I said. So it didn't exceed it by all that much. So I'm going to be paying close attention because I think the internal count leaves the space for a fourth wave and then a fifth wave up. And again, like I said, 41,776 or just above would be enough. 42,000 would be enough. Not necessarily that it needs to go all the way. Well, we already have established as well that once I get that fourth wave in, then we can start placing our fibs for, it would be, we connect, the fifth wave is related to the first wave and we can connect our fibs that way, where we go to the first, put it over to the fourth, and we get where our levels would be for that fifth wave. Again, most common is equality. The fifth wave is equal to the first wave, and that's the 100% marker, and that's the one I'm going to be looking for first off. And then that would be the one where I'm looking for this completion point. Now, I'm not going to run that yet because we don't have all the layers in yet, but you can run some thoughts in terms of you just take from there to there on an extension, and you can put it there to see, and you can put it here to see what it would look like on the upside. And actually, they come in pretty much below here. And then we'd finish minute wave 3. We come down in a minute fourth wave, and then we rally again in the fifth, and that should be the final. And so we have 100% at 43,034. That's for minor 5. But we'd be looking for it to take out that high, 45,082. Even if I run it over to this one, which is 45,054. So this, 45,073 to 54. So this is where I'm keeping it there. We're looking for it to get above 45,073. So this, if it got here and stopped and we started to go down, could put a couple of things into place. This could shift, and it could be a smaller degree, And so this would be, in essence, wave A of 4, and it could be wave B of 4, and then we come back down for wave C of 4, and then still rally. I don't think so because of the nature of the rally thus far. But again, in the other markets, we are including that as an alternate, that the whole move up has been a B wave, and it would be B of 4. So then we get a C coming down, and that C would be expected to take out that low before we would rally again. So we do have those possibilities, not necessarily looking at that. In fact, at the market, it's a lot of speculation, right? Because we're in those trade talks between China and the United States. And so every little breath of enthusiasm that comes out of there sends the market on a nice little flip higher. So I think that the market continues to want to react higher, to move higher in response to any easing of all this tension over these trade wars. So with all of that in mind, I think we could continue to move higher. And that's why I'm not looking necessarily to call it a B wave, but I think we continue to move higher within a minor fifth wave. Now, above that level on the minor degree, our next level would be 1.618. And that's 46,704. That definitely takes out that high. But we'll be able to fill in those blanks as we continue to finish minute 3, put in the 4. We'll be doing minute 1 to 5. And I think that's still because of the size of wave 1. If minute wave 4 were to come back down into here, and we add that on, we're going to be adding a lot of points. It'll be somewhere up in here. Definitively, I think we'd be above there. Now, once that is done, again, minor 5, intermediate 5, primary 5, cycle 3. And that sets the stage for a much larger cycle degree correction. And all kinds of things can put that into place. And we continue to just listen to the discussion on what these trade wars are actually doing and what they're doing on a global scale. I mean, I've read some interesting articles, and that it's not necessarily theory, but it's just trying to take a look at what we're doing or what our government is doing thus far with these trade wars is disrupting the global trade. And so it's not just affecting our economy, it affects the global economy. And to retain or build back the policies and the trade agreements that have been shattered is not as easy as one would think. And the longer term damage has not even been realized yet. I don't even think it's been discussed because the current administration believes it's going to be healthy for the economy and all this business is going to pull it back to the United States. But the fact is, it's like, well, that's with the idea that they're going to continue to do trade with the United States. But we have no idea. So again, if we're looking for something that's really going to drive a cycle fourth wave, a global recession would be one thing, because it's not just going to be something that hits the United States. It's going to hit many economies. So again, that right now is just really theory. It's just a thought. We don't have evidence yet. People feel stronger analysts feel very clear on that it will happen. I think, but the depth or the seriousness of it, or the severity of it, can't be determined just yet because we don't know what all the fallout is going to be. So with that in mind, let me go back to the more positive picture, which is that we still have more rally to do. And so, but we're getting close. So I think we're getting ready to finish up a minuet and then move up in a minuet fifth wave to finish minute wave 3. We have a minute wave 4 and then a minute wave 5, and then that's it. And I'm thinking that minute fifth wave should be a barn burner, so to speak. I think the market just really kind of climbs for the stars and it's usually how things finish. And on a grand scale, it could be that they just really reach up and feeling that if we break there, that's a breakout. And new all-time highs are just a given, which of course they would be. But again, the sustainability. So we'll see. We'll see what's going on at that particular time. All right. I'm going to finish this up, but I'm going to take a look at our moving averages, starting here on the daily. Still, when we take a look at this, and I'm just going to blow this up so we can see it, it's kind of, you see how flat? The 50 is flat as can be, the 200 is flat, the 20 is flat. So the market on a daily is like stuck. I think if we go and we start to go, then we need to, of course, we've only gotten to the 200, the daily 200. We've gotten up and touched it and then pulled back off of it and are now heading for the 8. So we've come back down below the 50 and below the 20. I think actually the 20 might be, had reached it and resting on it. So again, not a lot to be showing in terms of upward momentum. And even the RSI, the daily RSI, pretty flat. Angling slightly lower, but very, very flat. So it's kind of not giving us anything. And I'd be looking for that to kind of turn and start to push along with the market. And so that's it. That's the name of this tune. And I don't need to dwell on it anymore, but I'm just going to leave it back out here on this max that we are getting close, and then bring it down and finish up so we can always look at the daily. All right. Thank you very much for listening. Happy Mother's Day to all of the moms who are watching this particular post. I hope you have a great, great day or have had a great day. Our next update will be next week.